and welcome to Markets. Today I'm Lata Venkatesh and joining me from the New Delhi News Centre is Surabhi Upadhyay. Well, the markets didn't throw up too much of a surprise today. Nothing like the last 1.5 hours of Wednesday. The markets traded kind of rangy, even if it was not a very narrow range. There was a kind of fleeing towards defensives, especially pharma stocks, a characteristic that has been in the markets for the past 2 or 3 trading days. And maybe the market decided not to take too many bets ahead of the long weekend and the all-important non-farm payrolls that will come from the US tomorrow. Hi, Sylvie.
Hi, Lata. Yes, plenty of international headlines today with the Brazil rate hike and, of course, China announcing their GDP number to be just around 7%. But let's start with all the domestic action and with the headlines first up. Another volatile day on Dalal Street. The Nifty gyrates in a 100-point band to finally end around 8940 with a modest gain of just 0.2%. The Sensex shut shop around 29,450. Infrastructure, metal and bank stocks end weak, while pharma and FMCG stocks see some buying.
Markets give a thumbs down to the Pipavav Defence Reliance Infra deal. Pipavav trades at 10% lower circuit almost throughout the day on concerns that the transaction won't bring any funds into the company, while current promoters get an exit. Clarity also awaited on Pipavav's CDR plans.
The mid-cap index outperforms benchmarks by a wide margin today, surging 0.8%. High beta names like NCC, GMR and JP Associates find some buying support after the recent sell-off. Aban Offshore ends higher after redeeming bonds and reducing its debt burden by 1,335 crore rupees. Adani Power gains 5% on winning the Jeetpur coal block.
Those are some of the headlines that dominated Mindspace, and here are the experts that we have lined up on the show for you today. Market perspective from Aditya Narayan of Citi. Tushar Mahajan of Nomura Financial Advisory will speak to us about what to watch out for in the futures and options space. And Ranjan Dhawan, the CEO and Managing Director of Bank of Baroda, will talk us through how the bankers are watching the 2 rate cuts from the Reserve Bank and how much they can cut.
Okay, so all that opinion coming your way, but first the trading action. There's been one constant on Dalal Street this week, and that's volatility. Shares saw some wild swings once again today, but we did manage to end in the green. Anuj Singhal is now here with all that market action. Anuj, an erratic week, plenty of volatility. How do you read it as we get into the long weekend?
Well, this was, of course, a shortened week, but it was so volatile, and traders would be welcoming a 3-day break. And then, of course, next week the action will continue. And my sense is that the volatility may continue. Let's talk about today's trade because it was very volatile. And what was interesting was that you saw a lot of focus on defensives. Pharma and FMCG kept rallying through the day. Banks corrected in the first half, but in the second half, banks made a big comeback. That was quite interesting. Mid-caps outperformed, though the breadth was actually quite even Stevens at about 1:1. Let's talk about the stocks then. Pharma and FMCG, as I said, they were the top gainers in trade today. Look at Sun Pharma, 3.5% higher now. Lupin was up about 3%. Hindustan Unilever is making a move towards 1,000 rupee. That stock also made a big move. Financials, as I said, made a bit of a comeback in late trade. So stocks like Bank of Baroda, HDFC Bank were all up about 2%. On the losing side, few stocks that corrected today or fell today included TCS ahead of its analyst meet. Infosys was down 1% and Coal India was down about 2%. Some other nifty losers included some of the resources stocks like NMDC, Ultratech Cement, which has been running up quite a bit, so that corrected, and Hindalco was down about 3%. On the gaining side, in the mid-caps, Spark was up about 10%, NCC again up 6%, Mastec up about 13%, and finally the deal of the day, Reliance Infra buying stake in Pipavav Shipyard. Reliance Infra was up 3%, but Pipavav Defence was circuit down 10%. So as I said, a short week is over. Next week, of course, the volatility may still continue and the Nifty might still remain in a bit of no trade zone, and it may all be about individual stocks for next week as well.
Oh, you said it, Anuj, individual stocks. On that note, let me point out a few of them that have been up and about for the past 2 days. Nitesh Estates was up another 20%. That company used to post losses, but tied up with Goldman for a JV, Goldman Sachs that is, and since the past 48 hours has been big among the gainers. SML Isuzu is up another 16%. That company reported very good sales. Spark, the Sun Pharma research wing, has been doing very well after it got US FDA nod for that anti-epileptic drug. Titagarh Wagon Volkswagen's division of shares and continuing a kind of strong rally after the markets learnt that railways will be one sphere where the government will spend a lot of money. Aban Offshore, we spoke to you about the repayment of debt, and that stock was up about 5%. Other stocks, Info Edge was up about 7%. Most of the road stocks, and Anuj referred to NCC, with the cabinet clearing about 12,600 crore of road widening projects in 6 highways across 5 states. Stocks like NCC or even I think Patel Engineering doing well. Many of these road contractors were up and about on expectations of some work coming their way.
All right, let's move and then get some market perspective going. We spoke with Aditya Narayan, MD and India strategist at Citi earlier in the day, and he places his Sensex target for December at 33,000. He also expects the market to scale up further thereon.
I think it will be higher. If you were to give a date like December 2015, I'd say it would be at 33,000 because that's my target. But I think we'll be somewhere between where we are today and 33,000 6 months from now. I think if you were to look at the pure benchmarked people, I think I'd be surprised if there's too much more allocation because they're already sitting 400 to 600 basis points, overweight. It's going to be a more slow and a more measured kind of pickup. And actually, I would make the argument that this entire trajectory is going to be more stable, more sustained, but not necessarily as sharp on the upside as, again, people might hope for at points in time. But, in terms, I think it's the second half of 16 that you should look at the first signs of numbers tending to move up. We're looking at about 14% growth and about 17% for the year thereafter. And if you were to ask me, how could these numbers move, I think FY16 could potentially have a downside risk and 17 could potentially have an upside risk. We put about 25% in the banking space. We put about 18 to 20% in the tech space, about 15% in the pharmaceutical space, about 10% in the cement space, and we'd keep about 10% in effectively the consumer space, the consumer staples space, which we are a little underweight on, and about 10% between auto and about 6 to 8% for the capital goods space amongst the larger sectors.
Well, that was the big man from Citi, and it was an enjoyable conversation. Now for all the action from the futures and options space, let's go across to Nigel D'Souza.
Well, just looking at the derivatives data, it appears traders are playing for that range of around 300 points because the 8,800 put, that was fairly active in today's trading session. The premium fell from around 70 bucks to around 50 rupees. So the stop loss comes in at around that 8,730. The 8,900 put as well did see some writing today. The premium fell from 100 rupees to 80 rupees. So the stop loss for these traders comes in at around that 8,820 odd mark. Now remember that these traders are looking to eat into that premium and protect that range of around 8,750 to around 8,800. But the 9,000 call as well is seeing a good amount of addition. Traders looking to eat that premium of around 100 rupees, and in fact their stop loss will come in at around that 9,100 odd mark. So they're playing for that range of around that 8,800 to around that 9,100 odd mark. But take a look at the 9,300 call. There is some speculative action there. Traders going out there buying that strike for around 17 rupees, and they're limiting their losses to around 17 bucks. If the Nifty gets up and kicking, then they could make some money if in fact it expires above that 9,320 odd mark. But the reason that the Nifty ended in the green is because we saw buying on a couple of big names. HDFC Bank as well as HDFC, both of them saw buying interest. And take a look at those defenses. Lupin, Sun Pharma as well as HUL, all of them did see big buying in today's trading session. Good amount of open interest build up as well. But take a look at some of those losers. Idea, that's going to be the new entrant into the Nifty at the end of this month. That was getting sold into after quite a few days of buying. We did see NMDC aggressive shots on that counter, while Hindalco as well did see aggressive shouting in today's trade itself. From the broader markets, a couple of stocks that stood out with the likes of Adani Power as well as Ashok Leyland, both of them did see big buying.
All right, Nigel, thanks so much for that. Well, one of the stocks that moved very sharply in trade today was Pipavav Defense. The stock ended nearly 10% lower, actually locked in 10% down circuit pretty much throughout the session after Anil Ambani's Reliance Infra announced an open offer for the company, which is at a 15% discount to yesterday's closing price. Varinder Bansal now joins in to talk about the implications of the deal. Varinder, the street is just not impressed, is it?
Well, clearly, you can say that because, the street was hoping much, much higher. than what actually came in. Of course, if we just talk about Pipavav, some of the negatives, which are there is as you said, the price at what the acquisition has been done is lower than the current market price. The money what is coming is going to the promoters and not inside the company, which will help the working capital or the debt reduction. These are the important 2 points, which are coming out. On the positive side, people have got, Reliance Infra. We have to see going ahead that if at all, the synergy between both of them, could lead to better operations and reduction in debt or not. But that remains a big question mark. Clearly for Reliance Infra, the stock has been hammered, to as low as 450. Of course, market knows about all the debt concerns what this company is sitting on. But can they monetize? That is a bigger question, of that defense opportunity what they've been talking about via Pipavav. That stock was up nearly 3.5–4%, and people are watching out very carefully that how the funding of this transaction will happen for Reliance Infra. What are the capex? What are the working capital plans going ahead with Pipavav Defense, for Reliance Infra? But quite clearly, after Pipavav moving from 40 to 85 rupees in the last 2 months, has given away 10% today, and there are still large sell orders, which are still pending. You could expect the same reaction on Monday, but it will be very carefully watched what happens with this stock when it comes around to that 63–66 level, which is near the open offer price.
Thanks a lot for that, Varinder. Bankers, however, are viewing this deal very positively. At least one of them we spoke to. They expect the liquidity scenario for Pipavav Defense to improve. Let's hear out Mr. B.K. Batra of IDBI.
That has happened yesterday with Anil Ambani Group. We look at it as a very positive development. The company had issues about liquidity and shall I say high leverage. We expect that with this deal happening, the liquidity issues of the company should get largely addressed. As a part of CDR package also, the promoters were expected to bring certain amount of equity, so it will become easier now to get that equity into the company and for the company's operations to be ramped up. The company has been on the cusp of growth, backed by the existing orders and expected orders, in particular from the defense sector, and therefore association with a group like ADAG should help it achieve that growth.
Okay, that's bankers to the company. But speaking of bankers, the RBI surprised with another out-of-turn rate cut yesterday. So will banks pass on these rate cuts? Ranjan Dhawan, the MD and CEO of Bank of Baroda, says a 25 basis points cut in base rates could be coming soon.
I do believe that, rate cuts are in order, and going forward, rate cuts will occur. Whether they will occur next week or in the next 2 or 3 weeks, I really can't say. But I think they are inevitable. They will occur. And they will occur sooner rather than later. I would imagine that most base rate cuts would be of the order of 25 basis points. When we cut deposit rates, they affect after a lag. Whereas if we cut advances rate, they affect us immediately.
All right. Some important news from the global arena. Very important, actually. China has set its GDP target for the next year at around 7%. That's for 2015. It's the lowest target in 11 years and marks a sharp decline from last year's 7.5% target. The Shanghai Composite in China did not cheer the trimmed GDP target. That index ended almost 1% lower. The Hang Seng in Hong Kong was also down more than 1%. The Japanese Nikkei, however, finished 0.25% higher, and the South Korean Kospi ended flat. Well, on that note, let's take a break. But before we go, we have some great news for you about ourselves. CNBC TV 18 was once again the undisputed market leader on Budget Day. We were the most viewed channel on Budget Week as well. Thank you very much, viewers, for reposing your trust on us for the past 15 years.
We've been the first, we'll be the first. We've done the new, I know we must. We've given hope, we've more to give. We've shown lives, there's more to live.